Hello everyone, welcome back. This is Jeff from Mysteel's Iron Ore Department, here to give you the latest on China's ferrous market. Let's dive in. China's ferrous market received temporary support ahead of the Labor Day holiday, fueled by the rising possibilities surrounding mandatory crude steel production cuts, although no official documents or directives on reduction volumes have been confirmed. In addition, key monetary policy measures such as the recent reserve requirement ratio cut have been introduced to stabilize market expectations. However, the post-holiday rebound in total steel inventory combined with ongoing tensions in Sino-U.S. trade relations have weighed heavily on market sentiment. Steel market fundamentals appear to have passed their peak, with total steel inventories increasing after 9 consecutive weeks of decline. While steel supply edged down, it was not sufficient to offset last week's sharp drop in apparent demand. The decline in construction steel demand exceeded that of flats, largely due to the holiday-related slowdown. Looking ahead, downstream replenishment demand is expected post-holiday, though the recent increase in rainfall across southern China is likely to dampen any significant demand recovery. Production at integrated mills continued to rise amid favorable profit margins, while output from mini mills declined slightly during this period. Although rumors persist that some regional steel mills have received notifications regarding production reduction requirements, raw material prices have remained relatively firm, supported by historically high hot metal production and expectations of near-term post-holiday procurement demand. More production cuts are expected in the second half of the year, suggesting greater downside risks later in the year rather than at present. As a result, most raw materials saw only minor price losses. Meanwhile, the second round of coke price increases proposed by coking plants was rejected by steel mills due to elevated coke inventory levels. Profitability among coking plants has improved, which could drive higher production and exert downward pressure on coke prices in the weeks ahead. While supportive macroeconomic policies continue to provide some uplift to market sentiment, they are unlikely to reverse the seasonal decline in steel consumption. Coupled with the anticipated peak in hot metal production and persistent rumors of production cuts, this will continue to place pressure on raw material markets. However, high steel mill profitability and relatively low inventory levels may help absorb some of this pressure. Uncertainty surrounding upcoming Sino-U.S. trade talks and potential tariff changes also continue to heighten ferrous market volatility in the near term. Thanks for tuning in to this week's China Ferrous Market Update. See you next time.